happened during the last 6 or 7 years? It wasn't big business that had been borrowing money from the banks. This wasn't the period of increased indebtedness on the part of the corporate sector of the banks. This is clear across all countries, with the exception of the UK to a certain extent, where gearing jumps, but then it stays flat. All the same. So in terms of production, then this is the picture as we have it. Now I'm rushing a bit because we can time is short and the chair is very hard. So if we look at circulation, still within the domestic context, if we look at circulation, we will see then the impact of these changes that I've been outlining on the banks. Banks were forced to seek new sources of profitability. I'll tell you a few things about them. Paolo will tell you a lot more about it because he's been researching it quite closely. Banks have sought new sources of profitability during this period of financialization in international lending, in international transactions, in what we call financial market mediation. As financial markets expanded, banks have sought fees and commissions by facilitating these transactions. In money dealing operations, in other words, facilitating the movement of money in the economy and getting money out of those who hold deposits, those of you who've been overcharged from banks repeatedly in the last 2 years will know exactly what I mean by money dealing operations and making profits out of them. And fourth and last point for bank profitability is, of course, lending to individuals, lending to workers and others for purposes of extracting profits by banks. You can see clearly for the United States, but it's the same for the other countries in the sample. Lending to consumers and lending for real estate follows a clear upward trend as a proportion of total bank lending in the United States. There is no doubt that it's it's very long term. But it's cyclical, but there's no doubt about the long term trend. The outcome of this is, of course, inevitable. The figures I give you here are for the recent bubble. Individual indebtedness, as this has taken place, has gone up. But look at what happened during the last 6 or 7 years. It's incredible. The 4 countries I put UK in it because it's been a leader in financialization, although it's not a very important economy in that sense, are closely bunched together at around 70% of GDP as individual debt. And then the Anglo-Saxon countries shoot up, approach 100% of GDP. The Germans and the Japanese become less indebted to a certain extent. They're still heavily indebted, individuals are, but they've reduced their indebtedness during those 6 or 7 years of the bubble. What's been happening there is, of course, housing. Most of this debt is housing. The reason why British and German and US workers are more heavily indebted, and the figures for disposable income incidentally are breathtaking, much worse than that. The reason why this is happening is because British and US workers are indebted heavily for housing. There's been no housing bubble in the other 2 countries, and that's important in order to understand the mechanics of getting out of the crisis or the unfolding of the crisis. Pushing on now, financialization of the individual doesn't only involve debt, however. It also involves assets. It's a mistake simply to look at the debt, people becoming more indebted. It's very, very important, but it is one-sided. Assets are also important. Individuals are becoming financialized in the sense of becoming implicated in finance by possessing financial assets. And you can see the trend very clearly in terms of household assets as proportion of GDP. Most of these household assets, of course, are housing. So to a certain extent it's misleading as house prices go up. But they're not only housing, they're also financial assets for pensions, financial assets for insurance. So what's been happening is, of course, a transformation of capitalism in a sense. Surpluses, workers live longer today. They need pensions. They collect money for pensions. Someone has to handle that. That's become financialized in the sense of it's become available to private business to manage to the financial sector. It's in that context that what I would like to call financial expropriation has emerged as a key mechanism for financial profit in the last 3 decades. When we look at individuals, it's basically a direct transfer of personal income to financial institutions in the sphere of circulation. This takes the form of interest, it takes the form of charges on debt and money-giving services. This takes place in transactions between financial institutions and individuals, not businesses. So you can have an exploitative, unequal, even in exchange terms, relationship. And it also takes place as fees and commissions and financial profits from handling individual financial assets. If you look at how pension funds, and Paolo will give you more about this, pension funds and insurance companies have been handling the assets of large volumes of population put together, you will see they've been making a lot more on that than though the owners of the assets have been making. It's a form of extraction of profits out of handling these savings by large numbers of people. This mechanism has been sustained by something that we all know, which is the withdrawal of public provision from housing, from pensions, from health, from education. These things that go with neoliberalism, that we all know have taken place in the last 2 to 3 decades. Private finance in particular, has become the mechanism for satisfying these basic welfare needs. Instead of meeting these things through essentially public mechanisms or non-private mechanisms, basically they are met indirectly through the financial system, and that of course allows for the extraction of profit, financial expropriation. Hence the social importance of financial data. It's not simply an economic thing what's happening, it's also a socially important thing. Much of social life now revolves around finance for the reasons that I've just explained. It isn't just boring. It's meeting basic social needs. And unless this is understood, we get hard to comprehend how the crisis will unfold and the importance of the crisis for working people. Hence also cause bubbles in crisis. Because finance can lend, finance can make profit, systematically as we know in capitalism. If it lends to capitalist business that will produce surpluses and generate the wherewithal for financial profit. Here we don't have that. Because stagnant progressively to repay the growth profits for the growing financial assets. That creates room for essentially bubble activity that feeds on itself, and ordinary people end up paying the price. Paolo can tell you more about it. Am I doing well? So 2 minutes. The state is the pivot of this. I stress it, as I must, because much of this stuff, financialization, has gone on the back of free markets and everything else. Nothing is further from the truth. The state is the pivot of all this. It's the pivot of it in 5 ways that I quickly put down there. First, the state provides, through the central bank, the managed money, the means of payment, without which this credit would not have been able to grow. Right? And we know the importance of this in the current crisis. What allows the state to intervene and create liquidity is the ability to create money. That's the first thing. Second, state bonds, state borrowing instruments, provide the benchmark for all financial markets. Again, Juan Pablo will tell you more about this, but without state bonds, without the promise of the state, in particular the American state, to honor its promise to pay, very little would have been able to grow in the same way in the financial market, for debt, liquidity, and of course, reliability. Third, the state has consciously driven savings to capital markets. Legislation in the United States, legislation in this country, consciously driven savings into capital markets. Fourth, the imperial state, meaning the United States, has forced financialization globally by forcing developing countries to adopt capital account liberalization and so on. And finally, of course, the state is pivotal because it comes to the rescue, as I know, when the crisis materializes. Financialized capitalism is a very peculiar system. There have been, in the past, the historical past of capitalism, there have been occasions when